Yeah. So you got US dollars. You can't put any more money into crypto. Peter, you also can't put any more money into crypto.
Well, I don't have any money in crypto, so I mean,
what do you do with US dollars today, Raoul? No more crypto.
I'm actually long US dollars because I think the dollar's going up because I think the world is actually slowing down again. So I'm long US dollars and long some bonds. And those are the only two other trades I've got in the world. And I've also got some carbon futures in Europe. So those are the only three trades I've got. The carbon futures is a fantastic long-term story that it's driven by the incentive system within the EU to raise the price of carbon, and these futures are directly linked to that. And then I'm long dollars and long some bonds because I think the world slows down a bit, and the rest is pretty much 100% crypto.
Mooch?
Well, we're basically more or less out of the bond market. We're reducing our structured credit exposure because of the lack of interest rates in that area, and we're in growth stocks actually. So I don't own dollars the way Raoul owns them, but I own a lot of U.S. dollar denominated growth companies.
And are you not concerned that the market has repriced itself and we're seeing the markets at all-time highs today? Are you not concerned that
Ran, this is a really interesting point, right? Because everybody goes to this and says the markets are expensive and therefore there's risk. Play that through right now. If the markets fall 15%, what is the reaction function of central banks? It's currently to print more money. So in which case stocks go back up. We had the largest recession in all recorded history. It lasted 2 months because of the ridiculous amount of monetary printing. So now that both the governments and the central banks know that they have one trick that can basically, in their mind, stop a recession, they will use it all the time. So it's a weird world where buying puts used to be a profitable strategy when you got the timing right, but actually it's buying calls into that actually makes more money. You want to be on the long side and assume that the central bank owns the down 15% and lower put, and it's free for you. So it's kind of skewed how the world works. And I kind of agree with Mooch is that in the end, growth stocks have proven over time that in lower interest rates and a kind of weird growth environment, they will outperform massively because they're also seeing network effects and the massive rise of technology.
And some of them have tiny amounts of yield, believe it or not.
Yeah, that underperformance, though, is going to end when the money printing that you're referring to unleashes much greater increases in prices for raw materials, consumer producer prices. So when we get into a very high inflationary environment, at least the way it's measured by the government indexes, then a lot of money is going to move out of those growth stocks into companies that actually earn money and pay dividends that can raise and somehow keep people above inflation. But what you're talking about when you own a lot of dollars because you think there's going to be problems, I mean, the reason people are buying dollars now is because they're anticipating this tightening cycle. But there isn't actually any tightening going on. All that's happening is the Fed talks about tapering. Maybe they'll taper a little bit, maybe they won't. What we know for sure is they're never going to get around to raising interest rates because long before they finish the taper, the market will tank, will be in recession, and the next round of stimulus is going to be bigger than what we had after COVID. I mean, the QE keeps getting bigger and bigger and bigger because the bubble is bigger, the addiction is bigger, and so eventually these dollar rallies are going to get smaller and smaller because the tightening cycles are smaller and smaller, and then the easing cycles are bigger.
Even if you're right, let's say you're right, and let's give you that scenario out for the next 6 months. You still have to be long equities in that scenario because if you go back in time and look at inflation creeping into the market, not hyperinflation, but what you're talking about is maybe the Fed even suggesting they'd start to tighten. You're not going to get competition from fixed income or the dollar in its liquid currency until the 10-year has a 3 handle in front of it.
Yeah, I do. I mean, I do own.
That's a very long time from now. And so in the meantime, you want to own stocks, even the index itself, because it tends to outperform even as you start to tighten. People think,
I want to I have a lot of equities. I want to just be selective. I want to buy stocks that I think have real value. Almost everything I'm buying is outside the United States because I perceive much greater risks and problems here in the United States. So I'm abroad. But yeah, I keep some cash and I keep some dollars because I do think that you could continue to see lower prices and I'll buy more equities into any kind of decline.
For you. Do you ever own technology companies with network effects, or if those valuations, those growth valuations, kind of been out of your matrix of how you invest, so you stick to value investing?
No, I've owned tech stocks in the past. I mean, not in the recent past. I haven't been there. And I may look at them again one day if they really get cheap, if everybody starts, getting rid of them. But right now, the stocks that nobody is buying are the ones that I want. I mean, they're where you get the good value and the good dividends. And they kind of came into favor recently, but now a lot of the stocks that I own, they're the ones that are correcting because people are kind of reversing their bets on the inflation trade. People are now think, oh, there is no inflation because the Fed is going to stamp it out. The Fed is going to tighten, and inflation is transitory. It's not transitory; it's just getting started, and the Fed's not going to do anything but throw gasoline on the fire.
I just want to say one thing to my fellow guests, and something I learned actually from Mr. Wonderful is about the adaptability and about understanding that the world is moving at an exponential pace. And so what I love about Kevin is he had a point of view, and then he stepped back and he said, okay, wait a minute, let me challenge my hypothesis and let me look at the world. And so it's reminiscent of Thomas Malthus. He said that we were all going to starve. The food was not going to pace the population growth, but he missed irrigation and all those technological developments. And I just think that Peter's line of thinking, which I respect and is something I was trained to study in the 80s and 90s, I think we've had a seismic change in the world, and we're about to have an introduction of newer and newer technologies, AI, robotic technology, biotechnology, software programmable biotechnology. All of these things are going to lead to an unleashing of exponential growth that we can't understand in our primordial system. Because we're sitting here in a 100,000-year-old piece of machinery that hasn't evolved, and yet our iPhone went from iPhone 1 to 13 in 10 years.
Yeah, in other words, it's different this time. Yeah, I know. That's what they always say.
I think it's the same this time. I think it goes to the tweet that I think, Raoul, you made this tweet earlier saying, I still see people calling crypto a bubble, and thus it's unsustainable. I mean, you looked at the charts, but then you compared it with the tech stock overvaluation, and I guess it speaks the same. It speaks volumes.
Well, I agree. I think everything that's speculative is overvalued. All those tech stocks are overvalued too. I just think that Bitcoin is even more overvalued because those tech stocks have some value. I just think the prices are too high. I don't think Bitcoin has any value. So any price is too high.
Let's stay with that thought for a second, and let me propose something to you, Peter, and the rest of the group to debate, because I live this every day. I service institutions and sovereign funds, pension plans in the indexing business that I'm a partner in. And well, here's what they tell me, and you can debate this till the cows come home, but I've come to believe it, which is really what's turned me around on my crypto portfolio. I own a lot more than Bitcoin today. They want to play in crypto, and the only thing that's keeping them out, whether it be Bitcoin or stable coins or tokens or whatever it is they have no compliance infrastructure.